And your next guest said in early April on this show that volatility and all that stuff we went through was a longer-term buying opportunity.
If you are a young investor, this is a gift. If you're saving in your 401k, and by young, I mean working and contributing at all, you can be 70 years old. If you're adding, this is a gift. Keep your contributions. If you were hoarding cash, keep investing.
And if you listen to that advice and actually bought more stocks a couple of weeks ago in the height of the panic, you are well higher, at least on paper. Back with us to discuss the downgrade and the markets is Peter Mallouk. He is the president and CIO of Creative Planning. And Peter, I appreciate you coming on this program and on X, trying to be a voice of calm. I get it, scary time. And if you're older and in your retirement, a lot of people really were afraid. But if those people sold into that fear, it's been a hard climb back.
Yeah, you're exactly right. And I love the common sense you were injecting into things earlier with some historical context. You know, there are certain things that are structural, like very long-term things we should be looking at, like unemployment is very low. There's not a great alternative to the United States. We're in the middle of an AI revolution. And then there are things that are event-driven, things that are happening in the moment. Right now, it's tariffs. 6 months from now, we'll be talking about something else. 6 months from then, we'll be talking about something else. And the key to being a successful investor is focus on the long-term structural factors that matter and try to stay out of the event-driven narratives that catch hedge funds and people that have carry trades and things like that can catch them in a bind.
Peter, we talked about this a little bit, but these comments from Ray Dalio where he says, look, people need to take this downgrade seriously, not because the U.S. isn't going to make its payments, but because of the idea that as we keep adding more, we have higher deficits, we have a very high debt load, we're kind of going to have to quietly monetize that, even if we're not overtly doing so, you know what I mean? So is that an argument for owning stocks, for owning real estate, for owning gold, for owning Bitcoin, which, no surprise, was at 107 this morning? Like, you have to participate in the ownership society of anything dollar denominated.
I am a Ray fan. He's a little bit fatalistic for me, but I'll tell you where I agree. You know, Brian was talking a little bit earlier about bringing politics in it. Let me do that for a moment and just make everybody on Earth mad. When President Biden kicked the Russians out of SWIFT, it was basically the ability to do business in dollars. Just because we're having a proxy war with them, that was an unprecedented move, and it caused an acceleration of movement outside of the United States. Very, very big mistake, I think, by the Biden administration. But then you look at the Trump administration, the way that they've handled tariffs. The stock market has recovered. The bond market, not really having it. And what we've sent a message to the world again is, go figure out how to do business outside of the United States, because you cannot count on us to be a reliable, ongoing partner. That doesn't mean we shouldn't be renegotiating tariffs. Of course, they can do that. But when you have the way the Biden administration, the Trump administration has dealt with the world in the last 8 years, has accelerated the movement away from the dollar, accelerated the movement away from investing in treasuries. So this is real. I mean, the Moody's downgrade makes sense to me because there are less people interested in investing in the United States. Now, why can we get away with this? If you were rating the Trump administration number one, Biden administration, and then the Trump administration number two, when it comes to the deficit, as you were talking about earlier, and deficit spending, all of them would get an F minus. We're spending more money that's coming in. You can't tax your way out of this. You have to control spending. Democrats and Republicans can fight about what spending, but they have to control spending. Why can we get away with this? There's no alternative. China, we can't trust the accounting, the demographic time bomb. Western Europe has become a museum. Socialism is completely decaying the economy. Emerging markets, just war all over the world. Where else can investors go? But the second they have a chance to go somewhere else, they might.